Hey, welcome back. We're breezing through hour two. It's a special, terrific Tuesday liquid lunch on Newsmax TV. I'm John TABACCO. We're at the Newsmax headquarters in Midtown Manhattan. The Dow Jones, as we speak, is down 28 points. Bitcoin is hovering around even, down 8 points. The two combined today are down $36, which coincidentally is the same exact amount of money that Frank came home from Atlantic City with in his pocket, $36. Frankie. Right. And Mikhail joins us. He's a dynamic motivational speaker. He's a good friend of the show. He's been on with us before. He's the owner of Stratton Equities. They're a leading mortgage and equities firm. And Mike, yesterday was Money Monday, and don't think this guy's not money just because he's not on Money Monday, because he's one of our big money guests. But we had on Tom Coughlin, who's the CEO of BCB Bank. They're a traditional bank. And he was saying that, you know, while the Fed lowering rates eats into their spreads on a lot of products, there's a tremendous uptick in mortgage lending because the rates are lower and people with good credit. Not the same effect for you guys at Stratton, because you're not necessarily worried about the Fed. You're really looking more at the people's creditworthiness and the assets that they have and stuff. In these times when when it's getting easier to access capital from regular banks with lower rates, how does that affect you at Stratton?
It doesn't affect us at all, because again, the programs are different, and that's what you have to understand, that rates can be 1%, but if you don't qualify for that program, you're not going to get that loan. So with us, we do have very low rates, but our rates are higher than regular mortgage companies because the programs that we have, a lot less guidelines, a lot less underwriting. None of our loans require income docs, so no W-2s, no tax returns. So again, those rates and those type of programs aren't connected the way what's called QM loans are, qualified mortgages. So our rates don't fluctuate the same way as a regular bank's rates would.
So some out there might refer to your type of lending as hard money. That's kind of like a street term, like it's a harder money because there's no doc, there's no income asset verification. What's the traditional loan to value when you guys give a loan?
It depends on the program. Hard money is a program, and I actually wrote an article that's been taken very well. The difference between hard money and fix and flip, hard money and these other types of programs. People use this word hard money as it's the end all say all, which it's not at all. It's a particular type of program. A hard money loan, like a true hard money loan, is an asset-based loan. You go into a maximum of 65 loan to value. Nothing on the borrower side really matters. It's just straight deployed capital. We have programs that go up to 90%, but it's not a hard money loan. It's a private money loan, a lot less underwriting than what you would do with any regular bank, but it's not a hard money loan. It's a private money loan.
Now, you're a hard worker, Michael. That's no secret. I mean, last time you were on the show, you were talking to us about how you used to sleep on people's couches, and then your company took in over $1 million last year. You could have done anything. Could have gone on Wall Street, been a stockbroker. You could have gone in conventional mortgage business. What made you start this particular type of mortgage company, a hard money mortgage company?
Well, I saw there was a need in the market. The big thing is we have the widest range of programs under any one roof. And what I really saw was there wasn't one company that you can get the gamut of programs under one roof. Somebody goes and applies, oh, we don't have this program, we don't have that program. Loan officers have a hard time because they don't make money, they don't close loans. So you have people applying to them all the time, oh, we don't have this program, we don't have that program. So I saw the problem that loan officers were having, borrowers were having. I said, why don't we have one company that has the extremely wide range of programs under one roof that can service a wide range of people, and let's make everybody happy. And that's exactly what I did.
Well, you made me and Frank very happy the last time you were here when you brought us down these beautiful cigars.
Yeah, I didn't want to say anything, Michael, but that was, when we were on the fence between booking you and another guest, I thought, well, if we book Michael, at least he'll bring us cigars. And then yet I'm sitting here cigarless. It's very interesting. Let's see how they do it. They hook you for the first time, and then good luck.
I'll bring some Cubans next time.
Yeah. I'm still enjoying it. I'm chomping on it. When I find something I really need to celebrate, I may light it up.
You have to light it.
But give me an idea here. So somebody comes to you, and Frank just misused the hard money lender again. He just blanketed everything you do. Not everything is hard money lending, but. Somebody comes in, they got a bunch of properties, and hey man, I got a couple $1 million worth of properties, no no mortgages, no encumbrances. I need some money quick. There's no credit check, right?
No, there is a credit check.
There's a credit
check, but different programs allow for different FICO requirements. We have two programs that you can have a 400 credit score. You can still get the money. We have some programs you have to have a 680 credit score. It's a wide range of programs. There's still a credit check. There's no income docs, no W-2s, no tax returns.
Got it.
That's what we don't do.
Okay, so for our audience at home, if anybody's facing a situation where they need some liquidity, they have some assets that are unencumbered, they have men's and men's credit, so 600 credit score, tons of assets. They come down to you guys. Give me a rough idea. We're not going to hold you to anything, but how many points are they going to pay up front to close the loan, and what kind of annual interest rate?
So it depends on what the program is. If you're saying fast money, fast money is a bridge. You know what a bridge is?
Yeah.
12 months. 12-month loan. So the underwriting is a lot less. They close in 7 to 13 business days, roughly, about a week, week and a half. These loans are historically higher because it's only 12-month financing. You're talking about rates anywhere from 8 to 11%. Those loans, short-term financing, come with higher points. So you're talking about could be anywhere between 2 to 4 points. That's on a bridge. If you're doing term financing, 5-year, 7-year, 30-year, well, those rates go down to 5%, and you can do them with 1.5 to 2 points.
Got it. So somebody wants some short-term money. We'll call it a bridge, right? Yeah. 12 months, what's the loan to value on that? About.
So if you're doing cash out, we have, I believe, probably the highest. It's 70 to 75%. If you're doing 12-month interest-only bridge, it's also interest-only. So you can save some, payments there. It's a 12-month interest-only bridge between 70 and 75%. And you can do that down to a 400 FICO.
So 400 FICO, $1 million property, right? Unencumbered. They come to you, Mike, I need $500,000, 50% loan to value. The max they're going to pay you is 4 points, and it could be less.
Correct.
Right.
Correct.
So on $500,000, that's $20,000, right? And then the max they would pay is 12% interest.
On that, probably between 10 to 11.
Okay, but let's use. All right, we'll use 10. So another $50,000 annual, right? And that's interest only payments.
Interest only payment.
So your payment will be $4,000 a month, and you'll pay $20,000 out of pocket plus whatever you.
No, it's actually rolled in.
It's rolled in.
You don't pay
You don't pay the points.
It's rolled. Well, you pay the points, but it's rolled into the loan.
Got it.
So it's
you
financed.
pay it off over the month. So
Correct.
You finance the $20,000.
Yeah.
It's not
we
a
don't
big
do
lump
any out-of-pocket fees. The only out-of-pocket expense to the borrower is the appraisal.
Got it.
And if people want to know more about Stratton Equities, maybe even get a loan for themselves, what's the best place for them to do that?
StrattonEquities.com.
StrattonEquities.com. Next time Michael's here, hopefully he'll be giving us another cigar.
And hopefully you'll still be right there where you are every day from 12 to 2 watching Liquid Lunch. We'll take a quick break. We'll come back right after this.